If you're still trading crypto like it's 2021, you're getting crushed and you don't even know it. The truth is, 95% of beginners lose money because they follow hype, not strategy. But in the next few minutes, I'm handing you the blueprint smart traders don't want you to see. Real tactics, real results, zero fluff. Hey everyone, welcome back to the Crypto IQ, your go-to space for no-nonsense crypto education. Today, we're diving into one of the most requested topics from our community, crypto trading strategies for beginners. Whether you're just starting out or you've bought your first coin and are wondering what to do next, this video will give you a strong foundation in trading without the fluff. Here's what we'll cover today. Chapter 1. The basics of crypto trading. Chapter 2. Key trading strategies with pros and cons. Chapter 3. Tools every trader should know. Chapter 4. Managing risk like a pro. Chapter 5. Common mistakes to avoid. Chapter 6. Final tips for building a solid trading routine. Let's get into it, and don't forget to subscribe if you want weekly content that demystifies the world of crypto. Let's start with the basics. Before you jump into trading, it's important to understand what crypto trading actually is, and the two main types you'll come across. At its core, crypto trading is the act of buying and selling cryptocurrencies in an effort to profit from price fluctuations. Unlike traditional investing, which is focused on long-term growth, trading usually involves much shorter time frames. There are two main categories of crypto trading. Spot trading. Spot trading is the most beginner-friendly type of crypto trading. This is when you buy a cryptocurrency like Bitcoin or Ethereum at the current market price, called the spot price, with the intention of selling it later when the price goes up. You physically own the asset and you can transfer it to your own wallet if you want full control. For example, you might buy 0.1 ETH at $2,000, hold it for a week and sell it at $2,200. That's a simple 10% gain, no leverage, no contracts, just pure buying and selling. Spot trading is great for beginners, less risky than other forms of trading, easy to understand and execute. But it's also slower to generate large returns, and you only profit if the market goes up. Derivatives trading. Now let's talk about derivatives trading. Unlike spot trading, derivatives involve contracts that derive their value from an underlying asset, like Bitcoin or Ethereum, but you don't actually own the asset itself. Popular types include futures contracts, agreements to buy or sell an asset at a predetermined price on a specific date. Options, contracts give you the right but not the obligation to buy or sell at a certain price. Perpetual contracts, similar to futures but with no expiration date. The big advantage here, leverage. You can trade with more money than you actually have, potentially amplifying profits. But here's the catch. Leverage can also amplify your losses. Many new traders get liquidated because they overextend themselves. Derivatives trading is fast-paced and high risk. Better for experienced traders, powerful but dangerous if not understood fully. If you're new, stick with spot trading until you've mastered the basics. Now, let's look at some beginner-friendly trading strategies. 1. HODLing. This isn't really trading. It's buying and holding for the long term. It's low effort, low stress, but also means you may miss short-term gains. 2. Swing trading. Swing traders hold positions for days or weeks, aiming to profit from market swings. It requires basic chart reading and some patience. 3rd, day trading. You open and close positions within a single day. This is riskier and time-intensive, but can offer quick profits. 4. Scalping. This involves making dozens of small trades throughout the day for tiny profits. It's high speed and requires quick decision making, best left for more experienced traders. 5. Dollar cost averaging, DCA. This is a safer, slower strategy. You invest a fixed amount at regular intervals, regardless of the price. It's great for reducing emotional decision making. Each strategy has its own risk-reward profile, so think about your lifestyle, time commitment, and risk tolerance. You can't trade blind. Here are some tools that will help you make smarter decisions. TradingView for charting and technical analysis. CoinMarketCap and CoinGecko. Great for checking coin prices, market cap, and trading volume. Exchanges. Start with beginner-friendly platforms like Binance, Coinbase, or Kraken. Portfolio trackers. Tools like CoinStats or Delta help monitor your gains and losses. News aggregators. CryptoPanic or Twitter can keep you updated on events that move markets. It's not about having every tool, just the right ones for your strategy. Risk management is where most beginners slip up. No strategy works if you don't protect your downside. Here are a few golden rules. Only trade with what you can afford to lose. Use stop-loss orders. Set a limit to cut losses automatically if a trade goes south. Don't over-leverage. Leverage can amplify gains, but also wipe out your portfolio fast. Diversify. Don't put all your funds into a single coin. Spread the risk. Avoid emotional trading. Greed and fear are your worst enemies. Stick to your plan. Remember, surviving bad trades is more important than winning every trade. Let's talk about what not to do. These are some of the most common beginner mistakes. Chasing pumps. If a coin is already up 100%, the party might be over. Don't buy at the peak. Following hype. Over-research. Always do your own due diligence. Don't buy something just because it's trending on Twitter. Overtrading. You don't have to be in the market 24/7. Sometimes the best trade is no trade. Ignoring fees. Trading too frequently can eat into profits. Know what your exchange charges per trade. Not having a plan. Define your entry, exit, and risk level before you make a trade. These may seem obvious, but even pros forget them under pressure. All right, let's wrap up with some key habits that'll set you apart from most beginners. Keep a trading journal. Log every trade, what you bought, why, what went right or wrong. This accelerates your learning curve. Stay consistent. Don't keep changing strategies. Give your approach time to prove itself. Stick to a schedule. You don't need to stare at charts all day. Set time for research and review. Always keep learning. Follow reputable educators, take courses, and stay up to date. Trading is a marathon, not a sprint. The more disciplined you are, the more consistent your gains will be over time. So there you have it. A beginner's guide to crypto trading strategies that actually work. Whether you're holding for the long run or looking to time the market a bit more actively, having a strategy and sticking to it makes all the difference. If you found this helpful, hit that like button and subscribe to the Crypto IQ. We've got more videos coming on technical analysis, DeFi, and everything you need to navigate the crypto space confidently. Check out our next video on how to read crypto charts like a pro. It's the perfect follow-up to today's lesson. Thanks for watching, and we'll see you next time.